Hello traders, it's noon Eastern Time, Sunday, November 12th. I thought I'd get a quick video out, take a look at our last pick. That's how every one of these videos starts off. I want to review our previous pick so that you can gauge how successful this systematic trading approach is. In my last video, I gave you probably 4 or 5 different picks. Most of them were the mega cap tech stocks. They all looked really good. And if we're going to get a year-end rally, that's where it's going to come from. That was the premise behind Microsoft. There were a couple of other clues that led me to believe that this was the strongest of the mega cap tech stocks. So let's take a look at what that was. You can see that the video came out here, which was Wednesday. Stock didn't do a whole lot. And then Friday, it took off. So we're going to do a lot of market analysis in just a bit. Here's what you need to take away from Microsoft, and here's why I liked it so much. You can see that the market had a big sell-off. This is a daily chart in the background. Big market drop. What did Microsoft do during that same time? It compressed. It did not drop. You can see the earnings announcement right in here. Buyers were supporting the stock. They liked it. Even with the market selling off, they were taking long positions. As soon as the market rallied, right in here, look what the stock did. It blew through prior resistance and made a new relative high. So that is the kind of price action that we're looking for. That demonstrates relative strength. That tells us that institutions are in there buying. Ultimately, our goal is to follow the breadcrumbs that the institutions leave behind. Whatever they're doing, that's what we want to be doing. And when the market was down like this and the stock was treading water, that told us that they were in there accumulating. So now that we've got this nice market breakout, you can see how the stock is also moving higher. Now, as you get proficient at reading charts, the one thing that you'll also be able to do is on a daily basis, on a D1 chart, look at this red candle here. This is the price action from Thursday. You can see the stock was down a little bit, but it didn't retrace much at all. It held all of these gains. Here's what the market did. Long, red, bearish, engulfing candle below the 100-day moving average. I've got to admit, I was getting a little bearish. I thought we might get that pullback that I've been referencing in recent videos. So you get this nice big market decline. What did Microsoft do? Barely pulled back. Why? Why did it barely pull back? Because buyers are in there. Buy. How many more you got? We don't care that the market is down. These are longer term asset managers who are buying because they want to own Microsoft a year out or 2 years out. They don't care that the market is down today and right now. Now, obviously, Microsoft is part of the S&P 500, so there's going to be some selling pressure because of the sell programs that run throughout the course of every day. You got buy programs and sell programs. So when they run, there is some natural selling pressure, but when the stock doesn't go down as much as the market did, that's what we call relative strength, and that's the tell. That's what tells us that the stock is ready to go higher. Now let's say, here's the other beauty of trading relative strength and relative weakness. Let's say that this day you were already long Microsoft. Well, when the market looks like it's ready to roll over and it's selling off hard, the stock is still treading water. So if you bought in here, you've got plenty of time, plenty of cushion to evaluate what the market's doing. That means that you can exit the trade without losing much money at all. Sometimes you can scratch the trade if market conditions are changing dramatically. Oftentimes, even if the market is down a little bit, the stock continues to move higher and you can make money. You don't have that same edge when you're trading the S&P 500. If you're long the S&P 500 in here and you see that big market drop, you are going to lose money. on that big drop if you get out of the position. If you've got lots of staying power, okay, well, fine. Then you weathered the storm and you're able to take advantage of the price action on Friday. But Microsoft was a much better value. It barely pulled back. And this is all, trading is all about risk and reward. Microsoft provides you with a much better risk reward scenario than trading the S&P 500. That's why we trade the stock. Market first, market first, market first. Now let's do some market analysis, but know that instead of trading the S&P 500, our goal is to find the strongest or the weakest stock, and that's what we're going to trade as a surrogate market position. Let me do one thing very quickly because I'm going to show you weak stocks that you would have wanted to trade, and I have one in mind in particular. SAVE has been falling sharply. So when you short relative weakness and you get a big green candle like this on Friday, you don't care. What did the stock do? Closed on its low. So if you're trading SAVE as a market surrogate position and you get that big market drop on Thursday, you're clicking your heels. You're happy. Friday, we get this big market reversal. Uh-oh. Gonna get trapped if you're short, weak stocks with relative weakness. Again, that's your edge. You didn't get your head handed to you. You could have evaluated the market on Friday and said, you know, I've made a lot of money on this short. Yes, it still looks weak. I think I'm going to lock in some of my gains because the market looks like it can continue higher. Relative strength and relative weakness, that is what I preach in every one of my videos. That is the best trading edge I've been able to find in 30 years. So let's take a look and see what the market did. So my market analysis on Wednesday, which was right here, I posted the video before the open. I said, look, we've had a really nice run up here, big sell-off, big bounce. Now we're compressing right at a prior horizontal resistance level. After a decent run like this and no news, during the course of the week, we're going to see some selling pressure. And during that selling pressure, here's what we'll be looking for. And we didn't want to get aggressively bullish yet after a move like this. We were looking for a very small pullback to the 50-day moving average, possibly to the AV WAP-Q level. And what we wanted to see during the course of the week was mixed overlapping candles, light volume, very stubborn price action on the way down when we did see it. Well, we didn't really even see any selling pressure. You can see tail, tail, tail. Every day that they tried to drive the market down, it rallied back and closed near its high. Tried to drive the market down, rallied back. Tried to drive the market down, rallied back. Well, finally on Thursday, they got a little bit of traction. There was some Fed speak. There was also a weak bond auction that we had this week. So interest rates were moving higher, so there was a little bit of pressure on the market. But you can see Friday, there were no clues that Friday was going to be a gangbuster, go-go rally day. I thought we might see a little bit more selling and then a bounce right in here, but well above the 200-day moving average. And that really is the most important concept is, fine, we're going to get a little bit of a market pullback, but we want to see that support hold around the major moving averages. We don't want to come anywhere close to the 200-day moving average because we want buyers to have the mentality that buy the dip, buy the dip, buy the dip. Any dip, I would be happy to buy because I don't think they're going to be very deep and I think they're going to be brief and we're going to rally into year end. That's the type of aggression that you want to see on the part of buyers. Well, when they have that mindset, that means that the pullbacks are going to be choppy with mixed overlapping candles and light volume, and those major support levels on the way down are going to be very sticky. So what do you do in this situation? You're bullish, but you think that there could be a little bit of a pullback. That's when you sell out of the money bullish put spreads. That's why I focused on that strategy in my video on Wednesday. Please go back and watch that video. It's going to give you a lot of information so that if you get a market pullback in here, you're not sweating it because you're in the strongest stocks. You've distanced yourself from the action. You're trying to take advantage of time premium decay. You probably couldn't get most of those spreads off. The coin spread that I showed you, that was actually there even during the course of trading on Wednesday. Thursday, you should have been able to get that spread done for sure. That's a nice trade. Spot was another one. That one I think you could have gotten off as well. But anyway, doesn't matter. We get this big rally on Friday. All of those stocks that were highlighted in that video participated very nicely. And I'm going to highlight another one in just a minute. So let's take a look at the price action on a 15-minute chart. Let's see what happened in here. How did this whole move get going? Well, here's the price action on Thursday. So you get a gap up, and the first bar is red. Okay, already we have a warning sign. So this is not going to be a gap up and go. There's resistance. Now we see another long red candle, and we've got a bearish 1OP cycle here. We had it on a 15-minute basis. We also had it on a 5-minute basis. If we go back and look right in there, it's telling everyone don't bite on this move. Then you get your long red candle. Got a nice little bearish move in here. We try and get back to the high. This is a lower high double top. We have another lower high. Okay, now we know that there is some resistance out there. Market drifts lower with mixed overlapping candles, lots of chop, lots of retracement. This is not a particularly strong move. We did have decent volume though, and this was all related to a bond auction. So what happened when we came in Friday? Well, we had this gap up, and again, we're looking for this gap reversal possibly. We get this nice bearish 1OP cross. We do not fill more than half of the gap. That's actually a fairly bullish sign. What we want to see is that entire gap filled and then some, and we want to stack some red candles in there. We didn't stack any red candles. We had some solos, retracement, solos. Now we start retracing. I still can't say anywhere in here that I would be particularly bullish. Okay, off of the low here. Okay, mildly bullish maybe. You've got this 1OP cross here. Okay, that looks good. Didn't fill more than half the gap. Okay, that's pretty good. This is a nice long green candle in here. Still nothing to get me excited. Okay, we stack a couple more. That tells us that this little move is legitimate. Then we compress and we don't give back any of the gains. We have a bearish 1OP cycle, never even gets down to zero, and then we've got another candle that lifts off. Right in here is where I would have started going, all right, we're going to move higher. Well, once the momentum was established on the long side, you can see that was around the 437 level. Well, we're only a hop, skip, and a jump away from the 100-day moving average, and eventually programs just fueled the move higher the rest of the day. And once we were within striking distance of the 100-day moving average, the market just continued to float higher. Some pretty decent volume along the way. Not really any news to drive this price action. We do have seasonality working in our favor. I've been telling you that from back in here. The market tends to rally in November and December, to be very, very careful with shorts. I like this move. I've not been bearish at all. Yes, I've been looking for a little pullback here. That's why I suggested selling out of the money bullish put spreads. Let's look for a nice little choppy move lower that lasts a few days, and then look for buyers to come in and blam, take out that 100-day moving average. That's what we've got going on right now. So we've got a nice breakout to the upside. Let's put up our automated trend lines. 10TL now, you can see there's a nice trend line, breach to the upside. The blue line is your 100-day moving average. Yes, we've got a little bit of resistance on this downward sloping trend line around the 443 level, But this breakout is the way that we like to break through resistance with a long green candle closing on its high. Volume could be a little bit better, but it was better than average. Okay, we've got everything set here to be favoring the long side. The news this week, pretty light still. We got the CPI and the PPI coming up. They have not had as big an impact on the market as they did a year ago. Everyone's getting a little bit numb to the inflation readings. If anything, I would say that a light CPI or PPI might help the market, but I don't see that necessarily a hotter than expected number within reason is going to drive the market down, especially not with this type of buying that we've seen. There's some pretty aggressive buying right now. We're through all the major moving averages. So it's going to take a really nasty number to generate that kind of market decline. I don't see it happening. I think the market from here continues to float higher on light volume. This week, we also have retail sales coming out. The one thing that we learned from GDP that was released, our first look at Q3 GDP, 4.7% growth. Much of that was driven by the consumer. So retail sales have been strong. I'm looking for them to continue to be strong into the holiday season. So overall, I like this horizontal resistance level that we got through at 438. I like the fact that we're through the 100-day moving average. That's at roughly 439. We've got this downward sloping trend line that we've been able to close above. We are above all of the major moving averages. So all systems go. Does this mean that you go gonzo bullish into year end and you start loading up on all sorts of long trades? I wouldn't. I would still be selling out of the money bullish put spreads on really strong stocks. I would be leaning on that seasonal bullishness, but I'd also know that this is some pretty choppy price action on the way down, and we have seen selling. So this is not a gangbuster off to the races, everything's great type of rally. It's just going to be a light volume float higher. Asset managers like to mark their portfolio values up into year end. They get paid on assets under management. There is disincentive for them to sell. So there's not a lot of selling pressure into year end. They like these little float hires because then they have greater assets under management and they make bigger commissions. And so the whole industry knows of this, and the whole industry knows of this seasonality, so they tend to favor the long side. And I know there are probably some traders out there who are going to scoff at this and go, well, what about the Fed? The Fed is so hawkish right now. Can't they topple the economy? And this time it's going to be different, and we're going to sell off into year, and I can just feel it. Been doing this for 30 years. There's always a wall of worry, and into year end, like I've been telling you for the last month, when everything looks so dire and oh my God, it's all going to fall apart and this year's going to be different and we're going to close on the low and we're going to sell off. I hear it every single year. Trust me, you do not want to be short in November and December. You don't have to be long, but you do not want to be short. And so if you're still really hesitant, really skeptical, then sell some out of the money bullish put spreads. Distance yourself from the action. Give yourself time premium decay that can be working in your favor. Focus on day trades from the long side. The tech sector right now is really strong. So let's take a look at QQQ and see what that's done. And you can see how that's had a major breakout through these downward sloping trend lines, through this horizontal resistance level that barely even paused over the course of the last week. It was down a little bit Thursday as well, but boom, just erased that red candle instantly. And this was on Friday where you saw it obliterate this resistance level. So tech stocks look good. That's where we want to focus our attention right now. So let's go into our searches. I'm going to go into Green Royal Flush. Such an easy search for us to use. And these are the stocks that I want to focus on. Now I have my custom tables set up with all the variables that I like to follow. So this tells me if the stock is on a buy signal on a 15-minute, 30-minute, 1 hour, and daily basis. So yes, I want it to be on a buy signal across multiple time frames. And I can see they're all green. Well, that's what this green royal flush search looks for, is buy signals across every time frame for the stock. It's a great swing trading search. We'll take a look at a couple of other searches too, and I'll just show you how well these fields work. Next, I'm looking for relative strength. I want relative strength 5-minute, 15-minute, 30-minute, D1. So again, I'd like to see green across the board here. Then I've got an outside day, which means that the stock is above the prior day's high, or in a bearish case, below the prior day's low. And then I've got lots of volume. And I want to see stocks that have a lot of volume. So what this does for me is I can just zero in when I have these searches up. I already know that based on the search criteria that we use, these are going to be some strong stocks. But what do I trade right now? Look for green dots, as many as possible with blue dots. Those are going to be your stocks to trade. And if I go down the list, I can see Netflix has got pretty many, but some red dots in here. Hey, that's a pretty nice looking chart there. You can see it's broken above these downward sloping trend lines. It's above the 100-day moving average. It's above the AV/WAP-E, all the moving averages here. Yeah, this stock actually looks good. It's going to challenge this horizontal resistance right here. Had a little volume coming in. We've liked Netflix for quite a while. You've seen it in my videos recently. You've also seen Adobe. I love Adobe. You know, that was my featured pick a couple weeks ago. I told you how well the stock had been able to hold up through the market sell-off. Well, now we're through this horizontal resistance, stock continuing to push higher. Yeah, I could make a case for selling the 570, 565 bullish put spread and trying to get $1 for that. You can see earnings on 12/13, so there's still plenty of time. There's about a month worth of expirations that you can sell. Make sure that you're selling bullish put spreads that expire before the earnings date. We don't want to hold positions over the earnings announcement. So when those options expire before the earnings date, you don't have that risk. As I continue to go down the list, you'll see Apple actually looks good across all of these different time frames. This is going to be your long pick of the day. I like this breakout above the 100-day moving average. I like the fact that it's above the AV/WAP-E, above all the major moving averages. There's your 200-day moving average. It's breaking through this downward sloping trend line here, and here's another trend line that it's breaking. Let's zoom out and take a look at where that one comes into play. Right up in here. We'll move this like this so you can see it a little bit better. We'll go into a more normal view. And there you can see this is another trend line that starts up in here that extends. The stock blew through it on good volume. Let's look at the 5-minute chart. Yes, this is a nice, steady, orderly grind higher. This is what we like. Not crazy about stocks that do this, that chop all over the place. This is what we want. Tick, 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 higher. It's a great pattern. This is what we're looking for. And if we go into some of the other stocks like AVGO, you can see same kind of pattern in here. These are your super strong stocks that you want to focus on. So I'm going to conclude here. Apple is your pick of the day. I'll be reviewing this when I do my next video on Wednesday. But let's look at a couple of other searches. Let's take a look at Pop Bull. And there you can see, okay, I've got a lot of red in here, a lot of relative weakness. So I'm going to focus on the stocks that have the best patterns and the most dots across the board. And this makes it really easy for us to do that. And you can see there's still a number of good stocks in here. Marvel actually is one. You can see that breakout right here. But I'd ideally like to see a lot more relative strength in here. And the reason that we're not seeing a lot of relative strength, think about it, is because we've had a little bit of a pause in the market recently. And so these stocks are just starting to kind of recover. Now, when you come in Tuesday, Wednesday, Thursday, you're going to see a lot of these red dots pretty much across the board for these stocks. So that's how these columns help us to zoom in on these stocks. First, we've got the searches. Those are fantastic. Those get the best stocks in front of us. And then we have a lot of these variables that we can customize in our search tables that allow us to very quickly see which stocks, for instance, are making a new high of the day, which this is high of day, low of day. So I can tell when I'm looking at these searches intraday that Apple, for instance, is making a new high of the day. Visa is making a new high of the day. Amazon's making a new high of the day. So that's how we do it. We're looking for relative strength. Forget our market bearings first. Right now, the market is telling us to favor the long side, be long. You can day trade from the long side. You can short-term swing trade from the long side. If you're a little bit more passive on the aggressiveness and your confidence in the market is a little lower, no problem. Sell some out of the money bullish put spreads. That still reflects a neutral to slightly bullish market opinion. Find the best stocks. Trade relative strength. Right now, use the searches, go through, see which stocks are rising to the top of these searches, look for the green dots across the board. That is how easy it is. So look for a nice little float higher into year end. Look for Apple to move higher, and we will see you when I do my video on Wednesday. Good luck with your trading, everybody.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.